Hello, everybody. This is Dr. Sasha with you again. This is the Trading Champs, and let us discuss a few very important factors that we need to consider when we are trying to become a trader. And either you are a new trader or you are a professional trader, you have to keep in mind these few important factors. Right? You have to keep reassessing yourself, your strategies, your do's and don'ts time to time. All right. So let's get started. Forex 101 by Dr. Sasha K. So we have covered a few of these topics, and today we have to set the expectations right. Very simple, very easy. Do not expect to become a millionaire with a $100 deposit. So there's nothing as such which you call quick money. Right? One of the major reasons for foreign exchange has expanded all over the world and enjoys a high popularity amongst traders is only because of the expectations that when people come on board and try to become a trader, they think that they are going to become rich very, very quickly. And they are going to take advantage of leverage, and they are going to invest only a little amount, and with that, it's going to just multiply. Okay? It is true on one side that leverage attracts a lot of people and a lot of traders' attention, especially those who make small deposits. Many beginners rush into trading with a low deposit, expecting to make huge profits out of it. They do not understand what is the right percentage they should be expecting. More often than not, their false expectations always lead to poor decisions and disappointments. All right? So understanding leverage, strategy, money management, all of these things are very, very, very important, right? So it's very simple that why everybody wants to become a trader. Because Forex is something which involves loads of investments, and it gives loads of opportunities, great opportunities, but it also tries your patience. It also tries to make sure that you have the right discipline, and having the right expectations, right returns in mind is absolutely important. Right? How much you're willing to risk, how much you're able to deposit, how many hours you can dictate to your trading, all of this matters. And when you're going to put it all right, that's only when you are able to become the right trader. So your expectations should be always in check. For example, if I'm going to have a $100 account and I'm expecting to make at the end of the month $1,000 out of that 100, yes, that is possible, right? But it is not easy to reproduce the same thing again and again. Okay, that's why you have to be absolutely on point. Your target plan and your expected return on investment, which is called ROI as well, and then should be all well calculated in advance so that you do not face disappointment. Are you a trader who is able to trade all throughout day and night, all 3 sessions? Or are you one of the traders who is going to be only coming onto the charts for a certain amount of time because of other commitments like their work, their family, and any other thing? Okay? So it is very important to decide in advance that where and what time frame you're going to be giving to your trades. All right? And your answers to these questions will ultimately define your potential profits. So success depends on how prepared you are. Okay? If you have a good trading plan, if you have practiced it already on demo, and then if you have started with a small account with right expectations, that's only when you're going to be successful in trading. It also involves your entries, your exit plans, where to cut short your stop losses and your risk to come out of the positions. All of this is included in your success. So you have to learn to identify the trend as well. Now, the trend is your friend. We all say that. We have all heard this phrase so many times in our lives, but many traders don't follow the wisdom behind the word. They become successful only when they have identified the importance That trend is important. And when you're taking a trade which is in a trend already, then you just wait for a dip down, a little bit of retracement, and then you take an entry. There could be so many other strategies that you can be looking into so that you're able to maximize your profits. This would be beneficial for you once you have entered the trend. We have done it on gold. These days, it was upward trend on gold. And then at each dip, we have taken a position. You can just go on my Instagram and have a look on there. On my Telegram channel, I've just advised everybody to look into that. And I have presented my analysis, and all of them were mainly buy positions. Why? Because it was a trend. So this can be daunting for new traders. They do not have the vision. Their eyes are not trained to identify the trend beforehand. So you have to be quick on this and then identify, is it going to be trending or is it going to reverse from here? Okay, so learning how to spot the small signs of trending financial instruments, any instrument. You take it on GJ, you make it gold, you make it Euro USD, any of that. That is the key technique for success, which every great trader uses. And a trending financial instrument is more like to continue in the direction of the prevailing trend rather than reversing. So you have to be sure that you're learning how to spot it and you're identifying it earlier on so that you're prepared to hop onto the trend and then continue it from there. Now, what other things if it's not trending? Learn to identify the reversals. And I love reversals because most of the positions are going up and then they are reversing. They do not just keep going in one direction all the time. And it also depends which time frame, because reversals are on every time frame. Depends what are you trading. You have to identify your key levels. You should be knowing that from which point I should be expecting a reversal. So a trend reversal marks the end of an existing trend and the beginning of a new one. And it's the fastest way to jump on a new trade. And this can happen on any chart. It is possible. And again, I must say, successful traders understand this and they clock onto this before they're expecting it to continue. Because if you're expecting a trend to continue and you're taking a reversal trade, then you're in a mess. So being able to effectively read your trading charts is very important. And then you understand that where to put my stop loss, where should be my entry, what are the key levels that I should be looking at. And just focus, learn, give a lot of chart time, and I'm sure you're going to be okay. What is a trading system? A trading system is a strategy. There are thousands of strategies, I must say, which might be confusing for the beginners, but there are so many of them. But don't worry, as most strategies are trend following or reversal based. And this is not a coincidence, because trending markets are likely to continue and reversal markets are reversing. So it could be either one of the two. So learn to identify the trend and then spot the reversals, have your exits, have your entries and your stop loss, and all calculated beforehand. Have your do's and don'ts, no over risking, and I'm sure you're going to be good. And it would be a good idea to develop your own trading system. It's like generating a formula that you really need at times. And having a system means having a complete trading plan. You need that. You need to identify that is your system, your trade plan, your strategy working or not. Have you tested it? Means back testing. Why do you actually think that you need a strategy? Because if you're not going to follow a strategy, it is going to be an entry anywhere on the chart. Is it going to work? No, you'll be in a mess. You wouldn't even know, what am I doing? Is it a buy? Is it a sell? It's not a time pass. It's not a video game, right? So a fully tested system or a strategy allows you to trust it and act like machine, where you do not want to be emotional towards your wins and your losses. Losses are part of trading. You got to accept them as well. But you have to make sure your wins are bigger than your losses. So once you have found a comfortable mixture of the strategies, either they're indicator-based, their price action, their structure, their order blocks, their trend line, their channels, their RSI, divergence, all of these things, volume based, you just name it. There's so many things that I've studied, and I have studied them all. And I'm more than happy to help you all in this one. If you have any questions, if you want me to analyze your charts, if you want me to look into them, just hop on and give me a message on Instagram. I'm going to help you out to improve yourself wherever I can. But please keep in mind, testing, testing, and back testing, demo testing. It is absolutely important. Many of the experienced traders also, when they want to change their strategy, they go back onto the demo accounts, test their strategy, and then come back to the real money. Only by testing your strategy, you will know if it is profitable or it is not profitable. Is it worth repeating over and over again? So take your time, build up the trust in your system, and then trust comes with practices, with experience. You follow it, take advantage of the opportunity in the market. There's so many opportunities out there. It's your market, but you just need to be prepared. That's all what you need to do. Let's talk about drawdown. You have to make sure that the strategy that you have developed should have the minimum drawdown. And many traders in their early stages of their career look for a trading system that is very, very high percentage winning profits, right? And they ignore how much it is in drawdown. Drawdown, what is drawdown? When your trade is in a loss, it's running in negative. You do not want your trade to be running in negative because it is very, very much closely linked with the risk management. And risk management is very important. Otherwise, the negative drawdown trade is going to play with your psychology. And your psychology is directly proportional to your success. So all of it is linked. And I know because I have been there myself. And I know how it affects your mind. A lot of drawdown. You cannot afford it, and it's playing with your mind. You don't know what's going to happen, and you're sad. You're like, whenever I'm taking an entry, I first go in so much drawdown for such a long time, and when I close my trade, it just goes in positive. So you know it happens, right? And it goes in your direction. It's nothing is wrong with your analysis, but you have to make sure by back testing over and over and over again. In upcoming sessions, I'm going to also discuss all these strategies with you. And I am going to discuss how I am profitable. What do I do that I am able to have less drawdown? Of course, now I have a lot of experience and I understand the behavior of the gold chart when when I take a trade. So when I'm understanding the behavior of the gold chart and I understand how it works, that's only when I'm able to control my drawdown. So you have to make sure and backtest your system and make sure that you have minimum drawdown. All right? And what else do you need to fix? You need to fix your win and losing trade ratio because a lot of papers and articles have been written about this topic. How many wins you should be having, how many losses you should be having, or you can say it's okay to have a lot of losses. All you need is a big win so that you recover them all back. They do not understand the bottom line that these losses again play with your psychology. A trader's psychology should be rough and tough, shouldn't be messed up. Because if that is messed up, all of the domino effect is going to start toppling down. You start doing revenge trade. It's disturbed in a way that you stop believing in yourself. You think that it could be always a mess and you lose the confidence within yourself. And it is not a very pleasant thing to be in. So when emotions take over a trader's mind, it just goes blurry. And a blurry mind is a recipe for all those unpredictable outcomes that you do not want. Then your future is dark because it's all unpredictable. Your trade plan might work, might not work because you lost the grip on it. So successful traders know that make sure that their strategy has more wins than losing trades. After all, the most valuable thing that you have to always protect is your psychology, your mind. If it's doing and working fine, your mind, and then you are able to have all the control over your trading, all the control that you need. And you have to be in control all the time. Why? Because it is about your money. When markets enter a consolidation phase, they usually trend less. They're not moving up, they're not moving much down. Then you have to make sure and make use of the range. And when a breakout of the accumulation of the distribution phase usually occurs, market do trend, but it again stays back in some area. That happens with gold. So you have to be ready for consolidations, for uptrends, for downtrends, for reversals, and you have to be always securing your partials. So a single price movement in the opposite direction is enough to turn a winning trade into a losing trade for you, isn't it? So that is why you have to make sure if you've got 20, 30, 40 pips, you secure some. Don't give the profit and the money back to your market. You deserve, it's your hard-earned money. You deserve that. And that is the reason, always lock your profit. Risk management is the key to success, to be very honest. You cannot take high risk and, go with full margin. You have to be sure. I'm going to discuss leverages, margins, lot sizes, how to decide what lot sizes is good for you, how much usually on an average I should be looking at a stop loss, how to place a stop loss, how to take an entry, how to calculate the risk, what is risk and reward ratio. All these topics will be discussed very, very soon. Okay, one by one, we're going to cover all these topics, and we are going to make sure that you are becoming a complete, successful, disciplined trader. We're going to fix it all for you. Now imagine that you are the captain of a boat entering some stormy sea. Wouldn't you feel better if you had a host of safety, any safety tools on board? Compass, life jacket, emergency radio, inflatable raft, all of that. Why? Because you want to protect yourself. And this is the same. It is true with the trading the market. We may not want to think about the worst case scenario, but it is essential to at least be prepared, right? Have the tools with you. One of the most important elements of a successful trading strategy is undoubtedly the existence of risk management rules. And you have to have them in your trading plan. That what is the risk I should be taking? Is it a medium risk trade? Is it a high risk trade? If it's a high risk trade, you go with the less risk. If it's a medium risk trade, then you can be having your 1 or 2% of risk. And how are you going to enter the risk? Dynamics risk, static risk, all of these things. We are going to discuss these terminologies. If you watch other videos on my channel, it is dynamic risk, risk management, psychology. All these topics are covered, and some more I'm going to do in future in detail as well. So these rules that you're going to put for your risk management are very important. So keep all of them in your mind. And in our educational system that we have on here, our trading plan, our risk management rules, we have it all intact. When I am usually trading with my traders live on Zoom sessions, that's exactly what I do. I keep reminding them. I keep telling them, do not lose your grip on that. It is absolutely lethal. Okay? So be very careful. It takes you towards blowing your account, which you don't want. Always go easy on leveraging because it's very risky. It is one of the most lucrative market in the world that we have here. It gives you a lot of profit and benefit, but at the same time, it is very risky as well. So if we can have immense amount of risk, that means our profit could be amazingly big, but at the same time, our risk could blow our account. And it just must have happened with all of you. I have blown accounts. Everybody must have. But what did we do? We recover. I have developed such a strategy by now that I've recovered all of the losses and I'm in profit now. So small deposit turn into large amount of profits when you're disciplined, when you're taking advantage of this tool, which is leverage, properly. You're not going with quick money scheme here. Nobody is going to become a millionaire. You can be extremely profitable and extremely rich, but over some time period, not all in just one go, in one day. That is not possible. If that is your expectation, then you're in trouble. Thank you so much for watching, everybody. I'm going to end the topic right here at leverage. If you have any questions, please feel free to message me and I'll be happy to answer all your questions. All my media links are in the description, like Discord, Telegram, Instagram. You can contact me and send me your questions and feel free to ask for help. All right, guys. Thank you so much. Take care. I'll see you soon. Bye-bye.